What advice do you have out there for those folks in that age group who are watching right now and don't have that life experience yet?
Yeah, definitely one of the things I encourage is grandma was right. Don't put all the eggs in one basket. So we encourage a diversified strategy. And we also want to make sure they're not all correlated to move in the same direction at the same time. Now, that can be a beautiful thing when the markets are going up, but it can be absolutely punishing when the markets are going down if everything moves in the same direction. So we look at different assets and say, how do they not have the same correlations? Where do US stocks, international stocks, precious metals, bonds, real estate, any number of other things that we can look at and say these are all alternative investments. They all have different correlations. And that way, the idea is there's always something that's performing so you don't have to make a paper loss a real loss. And then that helps us survive those, what we call the sequence of returns risk of if something that you just put a bunch of money in dropped 30, 40%. Now, let's say we had 100,000 and it dropped to 60,000 overnight. A lot of times folks will say, well, that'll bounce back. We just got to get back that 40% rate of return. The reality is in that situation, if you only have 60,000 left out of that, to get back to even to that 100,000, you would have to have a 67% rate of return, a 40% drop.
Yeah.
So we help folks understand there's a long climb back depending on how severe that may be. So let's make sure everything's not moving the same direction at the same time.
So buy at different levels?
Buy at different levels, diversify into different assets, and get some counsel on that. Get some advice to say, what is that appropriate correlation there? So there are folks that in the financial advising field that can help with that. You can also do some of that through research, but to say what things tend to move in tandem with each other so we don't overload that.
That's some great points, Jeff. Really good stuff. Any other comments regarding this?
I think that's the key thing that we look at there is just make sure you have a well-rounded approach, one that understands what your short-term, mid-term, and long-term goals are, because those may be very different investing strategies. Things that are in the short term may have less of a cushion to absorb a downside risk. Things that may have an extended cycle of 10 years, 30 years, 40 years, you may have more capability to say, hey, I can absorb the hit if it happens. But we want to design different strategies because it's not a one-size-fits-all.
All right, Jeff Hammer, CFP, founder, CEO of Forte Impact Advisors. Good topic, good information. I thank you for joining us.
Thank you, Rick. Appreciate it.